You've probably seen the headlines about the Indian rupee. It's falling, and, well, everyone's got an opinion. Some are saying, don't worry, it's all under control, while others are yelling, crisis. So, what's really going on here? In this explainer, we're going to cut right through all that noise and figure out the real difference between a currency that's just feeling a little pressure and an economy that's on the brink of a meltdown.
So what's all the fuss about? It really comes down to this one number, 90. For the very first time, the Indian rupee crossed 90 to the US dollar. Now, that's more than just a number on a screen. It's a huge psychological line to cross, and breaking it has kicked off a massive debate online. And that leads us to the big question we're tackling today. Is a record low rupee a sign that things are about to get really bad, or is it something else entirely? The internet, as you can imagine, is completely split on this. So let's just break down the two main arguments you're hearing. Okay, so you've got two camps. On one side, you have people arguing this is a controlled reset. You know, the idea that the central bank is doing this on purpose, just adjusting to the new global economy. But on the other side, people are looking at the country's fundamentals and saying, no way, this is a crisis waiting to happen. So who's closer to the truth? All right, first things first, let's look at what's actually putting the squeeze on the rupee. Why is it tumbling right now?
Well, it's not just one thing. It's kind of like a perfect storm of factors all hitting at once. For starters, foreign investors have yanked almost $17 billion out of the market. Then you've got crazy high oil prices making imports way more expensive. And here's the kicker, India's central bank is basically just letting it happen. They're not stepping in to prop it up. And the result of all that? The rupee is down 5% for the year, which actually makes it the worst performing currency in all of Asia.
And you can really feel how this combination of factors is making people nervous. I saw this comment on Reddit that I think just perfectly captures the mood. There's this feeling that maybe the real warning signs, the red flags, are being missed.
This feeling really gets to the core of our question. A fallen currency is definitely worrying, for sure. But when does it stop being just a worry and actually tip over into a full-blown national crisis? To really see that difference, let's look at another country where that line was definitely crossed. Let's turn our attention to Pakistan's recent economic crisis. Researchers actually called it a perfect storm, and when you see these numbers, you'll understand exactly why.
Now, to get what happened in Pakistan, you have to understand this one key term, a balance of payments crisis. The easiest way to think about it is like a country's main bank account for everything it does with the rest of the world. A crisis happens when that account is about to hit zero, and you literally can't afford to pay for essential stuff like fuel and food, or even make payments on your international loans.
And in Pakistan, the warning lights weren't just flashing, they were screaming red. The national debt climbed past 80% of the entire country's economic output. Meanwhile, inflation hit an absolutely jaw-dropping 38%. Just imagine that. People's life savings were basically vanishing into thin air.
And here's how quickly it all spiraled out of control. In 2022, terrible floods smashed the economy, and the country's foreign reserves dropped to a terrifyingly low level. We're talking just 5 weeks' worth of import cover. By 2023, inflation was through the roof, factories were shutting down because they couldn't import parts, and it took a massive $7 billion bailout from the IMF just to stop the bleeding. That is a systemic crisis.
Now, as dramatic as all this sounds, it's not like it's a totally new thing. Economists have been studying these kinds of crises for decades, and the 1997 Asian financial crisis in particular taught some lessons that nobody's ever forgotten.
You know what's so wild about the 97 crisis is who it hit. Look at this list. We're not talking about small, struggling economies here. These are the economic rock stars of the 90s, the famous Asian tigers like South Korea, Indonesia, and Thailand. It was a really brutal lesson that just because you're growing fast, that doesn't mean you're invincible.
So out of the ashes of that whole disaster, a pretty clear playbook emerged. Basically 4 key rules. 1, keep your currency exchange rate flexible. 2, and this one is critical, avoid what's called a double mismatch. That's when your banks borrow money in US dollars, but then lend it out in the local currency. It's a recipe for disaster. Why? Because if your local currency's value falls, that dollar loan suddenly becomes way more expensive to pay back, but the income you're getting from the local loans doesn't change. It is a death trap. 3, never ever get complacent. And 4, if a crisis does hit, you have to act fast and go big. If you hesitate, you're done for.
Okay, so let's bring this all back home. We've seen what's happening with the rupee, we've looked at what a real crisis is like, and we've got some lessons from history. So now, how can you spot the real red flags for yourself when you're reading the news? This slide right here, this is basically the whole story in one picture.
On the left, you have India facing currency pressure. On the right, you have Pakistan, which faced a systemic crisis. The difference is just stark. Yes, India's rupee is falling, but its foreign reserves are still really strong. Pakistan's were almost gone. Pakistan's debt and inflation went into orbit. India's numbers, while not perfect, aren't even in the same universe as that emergency zone.
So, next time you see a headline, forget about that single currency number for a second. Here are the real red flags you should be looking for. Are the country's foreign reserves dropping like a rock? Is national debt getting crazy high? Is inflation stuck in the double digits month after month? And, the big ones, are major industries shutting down? And is the government going to the IMF for an emergency bailout? Those are the signals that separate a worrying trend from an actual national disaster.
So, to wrap it all up, is a falling rupee a big deal? Absolutely. It's a sign of real economic pressure. But is it the same thing as a systemic crisis? Nope. The key is to look past that single headline number. Economic stability is always, always a delicate balancing act. And now you know exactly what to look for when things start to tip. So the question is, what red flags will you be watching for?